can see my screen. So, is my screen visible? So let's look at the valuation and taxation of gifts. Now, a gift is defined to mean a receipt without consideration or for inadequate consideration. So it means that I can give you a gift for something small. That is why even when we do employment income or business income and somebody gives you something, okay, and you pay a consideration, that consideration is taken from the market value. We'll come and do that more in employment, right? So it can be considered as an asset or property that is transferred by one person who is a donor to another who is the donee without a return or payment, or for a very small payment. It's still considered a gift. Now, a gift is therefore a present and meant to be free, okay? This means that receiving a gift may require the donee to pay absolutely nothing or something less than the full value, okay? Now, why do we have gift tax? The general reason for imposing gift taxes is to raise revenue for government. However, the specific reason for raising gift tax is to prevent and discourage the concealment of income. So the main reason why the government is taxing gift tax is not only for government revenue, but to discourage people concealing their income, right? Because if somebody give me a gift and I don't disclose, then there's a potential chance that if I make money, I won't also disclose, right? So gift taxes does act as an anti-avoidance scheme designed to counteract what the concealment of income. I hope that is okay. So let's look at imposition of what? Gift tax. Now, a gift which is taxable under the Act shall be taxed at the rate of 15% on the value of taxable gifts received by the person within the year. That's from 2015 down to June 2023, right? Now, this one was under the first schedule and mostly it related to investment gifts. Okay. And I'll come and explain what that means. Related to investment or gift. An investment gift are gifts which are neither employment gifts, meaning that maybe I gave you some tip when you were working, or I gave you a gift as an employer, or a client gave you a gift when you were working because he liked your service, or a business gift. Maybe a customer decided to bring you a gift, right? You know, it happens in business. No be so. No be so.
Yes, it does.
Yes, so any gift which does not fall into either of these categories is considered as an investment gift, okay? And an investment gift is any gift that is out of these categories. It's neither employment nor business. So when you receive such gifts, as an individual, you have the option to tax it separately, okay, at 15% before 2023 June. After 2023 June, it's supposed to be taxed at 25%. We saw the same for realization, right? So gift and realization go together. They're under the same schedule. I hope that is okay. I hope you're okay with the taxation of gifts. So we are saying that if you're an individual, then you have the option to either tax it separately at 15% or add it to your assessable income. Are we okay? But for entities, they are supposed to tax it, add it to their income and tax, which will eventually be taxed at 25%, right? Okay, so that is it. Let's look at some general exemptions from gift tax. Now, if you receive, I get it, a gift, if it is under a will upon intestacy, okay? So gifts under a will, distribution of gifts will be subject to realization, right? But gift taxes will not apply. If you receive a gift from your spouse, child, parent, brother, sister, aunt, uncle, nephew, or niece, immediate family, exempt from tax. If you receive a gift by religious body, which uses the gift for the purpose or for the benefit of the public or a section of the public, right? If you also donate a gift for charitable purposes. So these charitable purposes, we will put it here as what? Donations to a worthwhile cause. Do you remember? Do you remember this? Do you remember this? Hello? Do you remember donations to a worthwhile cause?
Yes.
Yes. So we are saying that if you, under a will, you distribute your properties or you receive a gift from your spouse, child, parent, brother, sister, your immediate family, or from a religious body for the benefit of the public or for charitable purposes, okay, then they do not attract gift taxes. And also gifts that are below 50 cedis are also exempt. So remember this, that gifts that are below 50 cedis is exempt from tax. Okay. If they tax that thing in Ghana, they are not being 50 cedis. Oh, how? Tax are in the mass. Anyway, that is it. So let's look at taxable gifts. Any of these items are subject to taxable gifts, right? Or gift tax. So if you have buildings or a permanent or temporary nature, of a temporary or permanent nature, land, shares, bonds, and any other security that somebody gives to you, money, including foreign currency. So money constitutes a taxable gift. Business and business assets, any means of transportation. So if I give you a free flight, it's a gift, right? If I pay your fare for you, it is a gift. Okay. So goods or shuttles not included in the means of transportation. So if I pay something for you and then I included goods, but it was not part of the fee, the fare that I paid, those goods are also gifts that I've given you. Okay. So if we have the part or any rights or interest into any assets that you have above. So maybe it's not the asset itself, but I allow you to use my asset for some period, right? Which somebody, if somebody was using, the person would have paid for it. It means that it is a gift I have given you, right? So an asset or a benefit, whether situated in Ghana or outside Ghana, that is received by or for the benefit of a resident person as a gift, where the asset have been or is credited in an account or has been or is invested, accumulated, capitalized, or otherwise dealt with in the name of or at the direction of that person. So if you have any property, whether it's here or outside Ghana, right, where it has been given to you or it has been credited to you by someone, I get it. It is still constituting a gift. When somebody gives you a favor in money or money's worth for you doing something, right? That at the end of the day, it's not really something which is significant. Like, let's say that what I've given you is more than what you are doing for me, then it's like a gift. So let's say that if I tell you to, oh, you know something, sweep my compound for me, and you sweeping my compound, I ended up giving you 20,000 cedis. The law considers this as a gift. Hello? Does it make sense? And does it look like a gift? You sweep for me, let me give you 20,000. People who are even working in accounting or big firms are not getting 20,000. Then I just made you sweep for me and I gave you 20,000. So this is like an anti-avoidance provision, right? You sweep for me, I give you 20,000. Does it sound fair?
No.
Why is it not fair? I decided to just give you 20,000 cedis for sweeping. Why is it not fair?
The work and the payment does not commensurate.
Yes. The law is saying that that will constitute a gift. And that I hope it makes sense. I hope that makes sense.
It does.
Okay. So let's look at the valuation of taxable gifts. Straight from at 5.9 to this a transitional provision. Now, the value of a taxable gift is the market value of the gift at the time you received it. Okay. This thus presupposes that the actual cost to the donor is irrelevant in the determination of the value of the gift for tax purposes, as the market value is what will be resorted to. So you must also be careful, especially in strategic tax planning, right? They may give you a gift and say, oh, it was at the cost of this amount, but the market value is this. And remember, one thing we learned when we're talking about the anti-avoidance provisions is that always use market value, right? Arm's length, arm's length. We always want to avoid bias. And because gifts from these people, that is why basically gifts from immediate family are exempt, because these persons are considered persons in complete relationship. Do you get it? And it will bring complexities in gift tax, so it's exempt. Otherwise, relatives will manipulate gifts. So we are saying that you should always use market values. So if you visit section 26, it talks about quantification according to market value. So remember, is that okay? So we always use what? Market value of the gift at the time you received it. Are we okay? So let's look at returns and payment of gift tax. Now, if you receive a taxable gift within 30 days, you have to furnish the commissioner with a return in writing containing the following information. So there's a gift tax return, right? It has the full name and address of the donor, the description and location of the taxable gift. I get to the total value of the gift, how you calculated it, and the tax payable in respect of that gift, and any other information that the commissioner may require. And I told you that gifts not exceeding 50 cedis are exempted, right? Now, under at 896, gift taxes were not necessarily covered. Are you getting it? But this is how we look at it. Under at 896, the amount of gifts received by a person in a year of assessment shall be included in computation of what? Your assessable income from employment, business, or investment, depending on whether the gift was received in respect of an employment, business, or investment, respectively. That's what I was telling you earlier. So it means that when you receive a gift that relates to employment, you add it to employment income. When you receive a gift that relates to business, you add it to business income. I get it. When you receive a gift that relates to what? Investment, you add it to investment income. So this implies that gifts shall be taxed at the rate applicable to the rate, I get it, to the source of the income to which it relates. For instance, a gift received by a person from business carried out by that person shall be included as income in calculating the assessable income and shall be taxed using the graduated rate or corporate rate, depending on whether you're an individual or you're a company, right, or an entity. Similarly, gifts received by a person in respect of an employment relationship shall be added to his employment income and taxed using the graduated rate. So when there's a cost associated with the gift, we may allow the cost as an allowable deduction. So this is one issue where you saw me earlier highlighting what the donations to a worthwhile cause. Do you remember? So the donations to a worthwhile cause, you know that these donations to a worthwhile cause are allowable deductions. So where you have the market value of the taxable gift, right? So if I have the market value of the taxable gift and they tell me that, oh, I have done, let's say, a donation, okay? I've done a worthwhile donation to maybe a church or a charitable organization. I can treat it as an allowable deduction, right? You understand? Less it from what? This was an allowable deduction against an income. I hope that is understood. Then that becomes like your taxable gift or like your chargeable income. Please, are we okay? So let's take some questions on gift tax. That's all about gift taxes. I hope it wasn't any stressful issue. Any questions so far? Or everybody's okay?
Yes, sir.
Are you saying that when it's in relation to employment, you add it to your employment income and then if it's
Exactly.
a business, you do.
Yeah.
So the only time you do it separately is when it does not relate to both of these places.
Yeah, that means it now becomes an investment gift. You remember? So I told you what is an investment gift. It's a gift that is neither employment in nature or that doesn't relate to what business in nature, right? So if I give you land as an individual, since you are not in employment and since it's not because of your business, then it constitutes what? An investment gift. And you have the option to tax the market value of the land, not the cost of the land. The market value of the land as what? At either at 25%, right? Or add it to your assessable income. But then assuming you paid, let's say 200, let's say the land is 200,000 and I made you pay 10,000 for the land. What is the treatment? What are you going to do? From what we studied. The 10,000 will be treated as what? An allowable deduction against the 200,000, right? Is that not what we learned?
Yes.
Okay. So let's take some questions. Question 1. Now, the secretary of Bantex company transferred her shareholding in ASC company worth 100 cedis to her niece, if we will put on 15th August 2018. How will this tax apply? Will she pay tax? Will she pay tax?
No.
Why?
because he received from an immediate family.
Okay. Mr. Ashon transferred his 2-bedroom flat worth 200,000 to his son, to the son of his good friend, Kofi, on his qualification as a chartered accountant on April 10, 2016. How much tax would he pay? This one, is it taxable? Your friend? Yes, taxable, right? Not immediate family. So how much will we pay? Before 2023, you would have paid 15%, right? Or he has the option to add to his income, not so. So 200,000, we tax at 15%, we pay what? 30,000. Okay. Now let's look at Uncle Philip. Uncle Philip was appointed as the director of ABC in 2018. On the occasion of his induction, he received the following gift. Aha. So this one was a gift in relation to what?
Employment.
Okay. So let's see. I think all of them are above 50, right? Uncle Philip. What was his name? Uncle Philip, right? Uncle Philip. Computation of gift taxes for the, what's the year? 2018 year of assessment, right? Okay. Basis period from 1st of the 1st, 2018 to 31st of the 12th, 2018. So that is that. Okay. So in that case, what did he receive? What and what did he receive?
Cash.
Cash. Is cash a taxable gift? Yes, right?
Yeah.
So he received 50,000 from the MP. Then what else did he receive? Diamond.
Hello.
This guy, they chill. Though. Diamond in employment. Which company is that? Let us start sending CV. Then he received cash of $1,000 from his friend in Belgium. Taxable.
Yes.
Cash from friend in Belgium. So we have $1,000, and the exchange rate was 5 cedis, right?
Yes.
So that gives us 5. Then traditional sandals from father-in-law. Father-in-law.
Not taxable.
Why is it not father-in-law? Now your family member.
It's the father-in-law.
Father-in-law, now your family member. Eh, father-in-law, should he be taxed or exempt? The place is quiet. Father-in-law. They said immediate family. Is father-in-law part of immediate family?
No.
That's my question. So why
Yeah,
did
Bill.
yes, boss?
I think that if your wife is part of your immediate family, then I want to say your father-in-law is also likely to be your immediate family.
The Lord hasn't considered that. If you go to the court, your father-in-law is not your family.
I see.
That's why you paid bride price. You know, the law assumes that after payment of bride price and signing in the court, you have no relationship with them legally. It's between you and the contract is between you and your wife. That's why you say Mr. and Mrs., right? Not intimacy and family. Law is funny. The law there is very funny. So when we say immediate family, father-in-law is part. So why didn't this traditional sandals costing 200 from father-in-law? Why didn't he give it to the wife to give to him? So that it would be that's a good tax planning, right? So this 200 should have been given to the wife to give to him. Or don't you all agree? Don't you all agree?
No, I don't.
Why? If it was given to his wife to give to him, it would have been exempted from tax.
That's true.
Or?
The father-in-law needs to show face that he has also brought something.
But tax, we are just trying to save taxes. So though it's from your father-in-law, we'll say traditional sandals from wife. So that one is just for tax purposes. Or you don't all agree with me? He received a wristwatch from
Yes, sir.
wristwatch from nephew. Taxable?
His nephew immediate family.
Yes, of course. Oh, we saw it in the act. Man. Let's go back.
Yeah, that's true.
I just want you to look at it again. Spouse, child, parent, brother, sister, aunt, uncle, nephew, or niece. Grandmother, grandfather.
Yeah.
Okay. So is the watch taxable?
No.
No. The value of the taxable gift is how much?
Oh. You didn't add the sandals.
I didn't add the sandals.
Yes. From father-in-law.
Sandals. Father-in-law. 200 cedis spent out to me Sunday. Pacho, add them man why. He has done well. He has done well. Okay, 67,200, right? That's the value of the taxable gifts.
Yeah.
Okay. Value of taxable gifts. So we tax it at what? As of now is 25, right? So we use current rates. So that's 67,200 at 25%. 16,800. But he has the option to add to his income, right?
Yes.
Okay. So it says here that Mama Lou gave a golden earring and necklace as a parting gift to a pastor's wife on 26th of the 2017. The market value of the items at time of receipt was 50 cedis and they were purchased at 20 cedis. Can you be taxable? Would it be taxable?
The market value is 50 cedi, so it won't.
It won't. It's exempt from tax. Okay. Eja Kodria transferred his BMW saloon car to his private for his faithful services as his birthday present. The value of the car was 27,000, now costs 80,000 on the open market. So, how much are we going to tax it for? So it's just going to be the 80,000 at 15%. Now, this taxable limits that you see here, and there's been contentions. Yes, we said gifts above 50 cedis are exempt. But before, in at 592, we used to less this 50%, this 50 cedis exempt limit from it. But now, no. You just know that anything beyond 50 cedis is exempt, right? But once it's beyond, we tax it. So I think we should have taxed 80 at 25. Now, as of now, okay? We are dealing with current issues. Are we okay? So in exam, don't less this 50 cedi. Do you get it?
Yeah.
I'm talking in current terms, don't worry. It's because this one, you need to learn it as is, but you need to also know the amendment. Okay, so Papa Solomon received the following gift in 2019. So he received money from his son living in London. Is it taxable?
No.
Okay. His daughter's classmate, $100, taxable?
Yes.
Okay. His nephew living in Japan, 20,000 cedis. This guy, they chill, taxable?
No.
Nephews, okay, nephew. Land at Amasamai, his friend, the chief of Amasamai, 50,000.
Yes.
Yes, taxable. Okay, nice. Okay. So let's look at the last question. Now, Pastor Divine was transferred from his station at Kumasi to Axim after 10 years of pastoral service in Kumasi. The underlisted gifts were given to Pastor Divine and his wife, Prophetess Peace, during the send-off party. So let's see. So the donor is his daughter in France, and Pastor Divine received foreign currency of $1,000. Taxable?
No.
Okay. Daughter in France also sent Prophetess Peace. The daughter loves the mother power. Why will you give your father $1,000 and give your mother 2,000? Foreign currency. $2,000. Taxable?
No.
No. So the Women's Fellowship, as part of a parting gift, they gave Prophetess Peace necklace and earrings, 5,000. Taxable?
Yes.
Yes. The congregation gave Prophetess Peace kente clothes and sandals, 10,000. Taxable?
Yes. Taxable.
The women's leader gave Prophetess Peace cooking utensils worth 3,000. Taxable?
Yes.
Their son in USA gave Pastor Divine a Nissan Sunny worth 5,000.
Not taxable.
Okay. The son in US also gave Prophetess Peace. The mother, there is only money she wants. She doesn't need car. Foreign
It's a woman.
Foreign currency, 2,000.
Not taxable.
Not taxable. Then the men's fellowship gave Pastor Divine suit, shoe, and watch, 8,000.
Taxable.
The congregation also gave Pastor Divine kente clothes and sandals worth 10,000.
Taxable.
The catechist gave Pastor Divine suiting materials worth 4,000.
Taxable.
Taxable. So I think that was gift taxes, right? So gift taxes, are there any issue? Is everybody okay with gift taxes now? Any question on valuation of gifts? Or everybody is okay with gift taxes now?
Sir, please, I have a question.
You can ask your question, please.
So, please, do people really declare their gifts?
Yes, some people do. Some people do. Especially, do you know how GRA does this? So sometimes when people send gifts, so customs, customs is what will get you. People send gifts and the gifts come, especially the tangible ones. They come through the customs domain, right? Sometimes they tip off the DTRD that somebody has brought these kind of removal articles or these kind of goods and they look like gifts, right? Sometimes that is one aspect, so it will be taxed. Other aspects too, maybe you need a TCC, and they said declare all your sources of income. Okay, so sometimes the people do not have any option than to declare the gifts that they received. Faustina, are you okay?
Yes. So the second one, don't cast a gift, and I don't have.
The second one. Wait a second.
Hello, sir.
Yes, boss.
Hello.
Yes, please.
Sir, please. You said the 25% rate starts from
June 23.
June 23.
Yeah.
Okay. So either you apply the 25% or you add it to either the employment income or business or investment.
No. Business and employment, we always add. So if you're an individual,
Okay.
if it is a gift coming from
Okay.
employment or business, add. There's no option.
Okay.
Unless it's an investment
Okay.
gift. And how did I define investment gift?
Hello.
Yes, boss.
I said, please, I didn't hear you.
I said,
Sorry.
you get it now. But how did I define investment gifts? I told you it is a gift that is neither employment in nature or business in nature, right? That is the only gift that can be taxed separately at 25, right?
Okay.
This is everyone okay?
Yes, sir.
But the
So,
rest,
Bill,
Thank you, sir.
you're welcome.
Bill,
Yes.
sorry, but
Yes.
can you please take that again? I didn't get that difference very well.
If the gift came from employment, add to your employment income. If it came from business, add to business income. But if it is a gift that was not given to you because you were employed or because of your business, like somebody just dashing you something, then you have the option to either add to your income or separate it at 25. Oscar, are you okay?
Okay, yes, I'm fine.
So let's look at income from employment, including casuals, temporary staff, and then part-time employees, right? So we start with the payee system in Ghana, okay? So employment income